I'm sure you've flipped to the back of a newspaper, particularly the Wall Street Journal, and seen stock tables before. There are a lot of columns filled with tiny numbers. While it may appear complex, stock tables are simple when you're accustomed to them because of their strict organization. The first two columns tell you the highest price and the lowest price the stock hit during the past 52 weeks, aka 1 year. The third column tells you the name of the company. If the name is followed by a letter, then it indicates what class of the company's stock is listed. For example, Rockwell followed by PF means it is a preferred share. In this table, Revlon is listed by its A class. The fourth column gives you the ticker for the stocks, which functions as a barcode used to identify the stock. The fifth column tells you how much the firm pays in dividends per share for the year. For 1 share of Rio Tinto, you receive $2.30 in dividends per year. Often, this space will be blank, which means there is no dividend. The sixth column tells you the dividend yield. This is the current stock price divided by the annual dividend from the fifth column. I like to think of the dividend yield as the percent interest you get from holding a stock. The seventh column is the price of the stock divided by its earnings from the past 4 quarters. This column tells you how expensive or cheap a stock price is compared to its earnings. Historically, the average price earnings of the market is 16. A higher price earnings generally means a more optimistic view of the firm's future prospects. The eighth column shows how many shares were traded that day. Typically, it is listed in the hundreds, indicated by the 00 under VOL. The amount of shares traded becomes important to price changes due to the laws of supply and demand. If a price changes a lot on very few trades, then that price is not very stable because it might not be what the entire market thinks is the right price. However, if there are many trades and a price changes, that last price is much more stable as the market has reached a consensus. The 9th and 10th columns show the high and low prices for the day. These were the maximum and minimum prices you could have traded the stock for that given day. The 11th column lists where the price was when the market closed. If the closing price is 5% greater or smaller than the previous day's close, the entire row will be in bold to show a large change. The final column shows the dollar value change of today's close from yesterday. This means if a $1 stock closes at 105 tomorrow, the net change will be plus 0.05.